All right, good morning, everyone. Welcome to Stock Market Today. Today is Friday, July 5th, 2019. This is Nick Webb. I'm substituting in for Dan Russo, who is just on the final legs of his honeymoon. Actually will return sometime today, so on Monday he will be back. So with that, it's obviously a strange day today. You're sort of sandwiched in. Most people sort of took a look at a vacation day on Thursday or a holiday on Thursday and said, well, let's take a vacation day on Friday. And so a good chunk of the investment community is out today. So expect volumes to be light, but the market will be open. So, and what a market it's been. So it's been fun to be doing these shows this week because it's been just a breakthrough market. The S&P did break through resistance on Wednesday and is now in what Mark terms blue sky territory. So it's up well above its 2950 prior resistance. Next resistance probably is 3,000. It might even be 3,100, sort of round numbers where all of a sudden it clicks that the market's at this level now. Today is also the day where we will get another piece of the puzzle of whether the Fed is going to ease or not. The employment report is coming out at 8:30 this morning. Unfortunately, we record this show before that, so we won't have that information. And it's going to make a significant difference, not only in the pre-market, what's going on, but also what goes on today in the market itself. One of the puzzles that I've had over the last couple of weeks is that money flow, checking money flow. When the market is making this kind of move, it should be wildly positive, and it's not. So I'm curious about that. It's something to keep an eye on because you do need that institutional money coming in to shore up the market. And without that, at some point, the market will have, it just won't have the support it needs to keep going up. And right now, it looks like bond markets are soaking up the risk-adverse investors. So when people are taking risk off, they're going into the very safe government bonds. Makes sense, but the yields now are well below 2%. So that is, is that taking away some of the momentum from the stock market? But let's be clear, it had another good day. That's 4 in a row. S&P makes a new record again, and so did the Dow. So they're at all-time highs, both of those indexes. You know, we're looking for small caps to have a little bit of a resurgence at some point so that they too can begin to make new highs, but they're certainly well below that level. We talked about, it's been breaking through resistance and now it's well broken through. Also, all sectors were up on Wednesday. It was just, green across the board in any sector you looked at. And that's indicative of a very broad advance. So that's very positive for the market in general. And on a day when factory orders and some of the economic news was a little downbeat, if you will, the factory orders came in extremely weak. And that's further evidence of an economic pullback. Sorry, there's a word missing from that. Bullet. And one other note is that oil and natural gas is up strongly on Wednesday. It looks like it's going to have another good day today. So let's take a look at where the sectors have been moving. Real estate, which had been down in the doldrums, actually they had a couple good earnings reports, but also, as you look at various sectors of the economy that will benefit from a lower long-term bond yield, real estate really is in there because both on the expense side, but also on the revenue side. From the expense side, they have to take in they have to purchase land well in advance of building, getting all those permits, etc. So that takes a lot of money. They obviously have to construct those houses. Again, takes a lot of money. That money usually is borrowed. And so long-term rates coming down makes that cost significantly lower. As a matter of fact, we saw a couple of real estate firms actually doing some smart things where they refinanced all their debts to new interest rates to the new interest, taking advantage of the new interest rates, and really made a significant dent in their cost base. Second thing is obviously on the revenue side, when the 10-year goes down below 2%, that means mortgages are also going to go down 2%. And well, not down 2%, but they will go down. You know, you can see 30-year mortgages below 4% now. And that means that the cost to a couple that is just buying a house for their first house, all of a sudden that's within reach because their mortgage interest payments are going to be so much less. So it helps them sell more. It brings in a whole new market for them. People can now afford their houses. They don't have to cut prices much. And that's why all of a sudden you're seeing real estate take off. On the flip side, energy has been, you know, you've had these volatile moves with the energy prices. And until the sort of markets figures out where everybody's going, you know, you had the OPEC meeting agree to hold their production cuts for the next 6 months. That should have been a very bullish sign, but then you saw inventories build up in a couple of the foreign countries. US inventories then came in light, and all of a sudden the market, the energy prices spiked again. So it's been going up and down over the last 2 weeks. Until it settles out, it's hard for anybody to figure out what a energy company is worth. And I think that's part of what's going on there. We already talked about home builders. It's a great industry right now. You can see that Chaikin rates it very favorably. 14 out of 14 bullish or very bullish stocks compared to 3 bearish or very bearish stocks. That ratio of bull to bear is really strong. As a matter of fact, it's ranked number 7 out of 21 subsectors. And if I did take a look at the subsectors that were above it, because I thought, man, home builders must be doing very, very well. A lot of those are in the banks, and I'm not convinced that those are as strongly bullish as the home builders area. So this is a very strong industry right now. As you know, we generally take one stock from the top stocks listed here. So I took Taylor Morrison, did a quick chart of it. Let's read the chart the way that Chaikin would read it. And it starts up in the left-hand corner, upper left-hand corner where it's very bullish. And then you go down to where you've got the power bar, and you can see that it's been very bullish, really, or bullish or very bullish since January, with just a little hiatus there. So in general, we like this stock. The model has been very strong on this stock, and you can see in general, Chaikin's actually done very well with this stock. Now, next thing you look up at is the relative strength. Relative strength is extremely strong, and it has been strong for quite some time. That persistence is important too. So it's been consistently outperforming the market. So not only does Chaikin like the stock, but the market likes the stock. The last leg of that stool is money flow. And money flow, as you know, is a proxy for institutional interest in a stock. So is the smart money coming into a stock? And you can see that money flow, while it hasn't been completely persistent, it's been pretty strongly persistent, and it likes the stock. So all 3 areas, Chaikin, the market, and smart money like the stock. It's trading above its long-term trend. Nice looking stock. The only sign of, you know, maybe you wait a little bit is it's in the overbought, oversold. It's a little bit on the overbought right now, and you may want to wait for it to pull back a little bit, and then that might be a good time to get in. The stock of the day, now this is not a recommendation. It's really important that everybody understands that. This is just a algorithmically generated stock. We pulled out Astronics today. Astronics is an aerospace defense industry, which is a strongly bullish industry as well. As a matter of fact, it's like number 3 in our list of industries. So, you know, a lot of good underpinnings in that industry in general. You can see the, you know, all the components of Astronics are in the bullish camp: financials, earnings, technicals, and experts. which is why it then becomes a composite of very bullish. And if you look at the chart, just like we did the last chart, we've got it rated very bullish. You can see relative strength, so the market likes it as well. It's very bullish. Money flow, however, is not sort of totally lined up. So, and it's looking a little overbought. So this is not, it's not all systems go with this stock, but it's a nice looking stock nonetheless. So what happened in the market on Wednesday? Again, light trading, abbreviated session. Look at Symantec. It looks like they've received an offer from Broadcom to purchase them, and the stock just has skyrocketed. I don't think we've got a definitive purchase though. The next two down are really interesting because Conagra and Kellogg are two sleepy underperformers up until Wednesday, when they began to tout their Beyond Meat competition. So each of them have a Beyond Meat line of vegetarian burgers. For example, Kellogg has Morningstar. Now, I'm not a connoisseur in this field, but I don't know, Morningstar's been out forever, and I don't know if it sort of ever generated the buzz that Beyond Meat did. But literally on Wednesday, people began to focus on Beyond Meat competitors, and those two companies came up. Jeffries reported earnings. They were one of, a handful of companies reporting earnings, one of the biggest, and they absolutely crushed it. They had a great earnings report, and the market really helped them out with that. And then finally, L Brands got, well, I was going to say a lot of support, but that's, they're the maker of Victoria's Secret and some other brands. They've been languishing, and I get the feeling that sort of the market has been overdone on them. Electronic Arts, again, they had a terrific release of one of their games. This is not my area of expertise. Market moved up strongly with them. I think it's just a pullback based on reality. Broadcom, AVGO. Broadcom is the one that's making the offer for Symantec. When you do that, your stock price does lose because of the dilution. Qualcomm had a sort of negative court ruling on Wednesday, and so they're getting hit. Now, they're also getting hit in pre-market as well, so there's more market adjustment to do based on that, and it had to do that Qualcomm in some of their positions had monopoly power, and so the court has ruled against them on that. The last two are cruise lines, and they have different issues. Norwegian Cruise Line has a ship that is just sick and, well, broken, and the cruise has docked in Barcelona. It's a huge ship, and they're not going to make Rome where they're supposed to end, and so they're abandoning these thousands of passengers in Barcelona who have to get to Rome on their own. So it's a disaster. Royal Caribbean, on the other hand, they're still sort of reeling from the Cuba ban, and every new indication is that it's going to be a serious ban, and things aren't going to resolve in the near term. Jeffries, we've already talked about. They had a great earnings. Look at that, 17 cents they beat by. That's what it's going to require this earnings season. So well done, Jeffries. Couple new charts. Just look at durable goods orders. They came out on Wednesday, and it's beginning to look like manufacturers really beginning to run into some headwinds. If you look at the prior two recessions, manufacturing was a precursor to a recession starting. So again, with consumer confidence and the inverted yield curve, there are some warning signs that we may be heading towards a recession. Just, I checked in on mid caps because the markets were doing so well. And good news, mid caps are also just absolutely exploding. They're well above their recent highs, so that they're making new highs. So with that, I hope everybody has a good weekend. If you're on vacation,